with Shaun, Cartwright, Anadara Asset Management, and Pan Asia, Paul Locke. Great to have you guys on today. Just wanted to get a brief idea, I suppose, in terms of the battery fund that we're talking about today. How did this sort of come together, and what was the catalyst for getting this together?
Anadara Asset Management, we're a specialist investment manager. We have a range of managed investment schemes that invest in various assets and asset classes. So Viriathus Capital, which is our advisory part of the business, we've been involved in a number of battery related investments, and we built up a pretty good reputation for identifying really good undervalued lithium companies in particular, both in Australia and overseas. So the Battery Transition Fund was really born from our experience of investing in battery related companies. And we just identified a gap in the market for a fund specific to this space. And the Battery Fund, while it will predominantly invest in the resource companies, we're also focusing on some of the new technologies that are coming to the market that will help batteries improve, or completely new battery technologies altogether.
Sure, and what is the investment horizon in the fund in years, I suppose?
So because we like to identify value in companies early, we understand that there can be some short-term volatility. So we're recommending that investors coming in have an investment time frame of at least 3 to 5 years, because in our experience of investing in these type of companies over the last 10 years, is you really need to allow that period of time to allow these companies to achieve their milestones. The mandate though, it is for a minimum of 12 months. So anyone coming in, they are locked in for the first 12 months.
Just providing a bit of an outline, what does the scope look like from the point of view of risk management?
In our experience, we like to invest in companies that have got a series of milestones due over the investment period, over the 3 to 5 years. And our experiences have shown us that some of these milestones in particular have significant re-rating events. So we're really limited by what we can say with regards to what our target returns are.
Sure.
But if you have a look at our track record of investing in these type of companies, the returns that we're aiming is well into the double digits on a rolling 3 to 5 year period.
Is there any other type of companies that the fund's looking to invest in, or is it mainly the battery metals sector, would you say, Shaun?
The mandate is divided so that we've got the opportunity to invest in up to 60 or 70% in the raw material providers, the lithium providers, the cobalt, nickel, manganese. But because we identified such an opportunity, because of the projected shortfalls with the raw material suppliers, we've also got scope to invest in things like battery recycling technologies, battery improvement technologies. Part of our research just uncovered a really exciting new technology called dynamic inductive charging, where they will build the recharging plates for electric vehicles into the roads we drive on. So your car will recharge as you're driving.
And your garage.
And your garage.
So excited.
They've just built the world's largest dynamic inductive charging track in Italy, and they're testing buses and cars around it as we speak. Really exciting stuff.
So that will just change the transport industry forever.
It's really clear that governments around the world are pushing people into electric vehicles. They're providing all kinds of incentives, including tax breaks in Australia. So right now, if you buy an electric vehicle for under $80,000, you don't have to pay fringe benefits tax on it if you buy it in a company, for example. So incentives like this are encouraging the uptake in EVs. I think the biggest detractor, or the biggest hurdle that a lot of potential buyers face, is limited range and the ability to recharge their vehicles for longer drives. Whereas some of this technology will overcome a lot of those challenges.
I think on the limited range though, what's happening is people are understanding they have to approach it differently. So whereas you would normally fill your car tank up once every week or 2 weeks, they're realising they get home and have to plug it in every second day. So I have read where there's a change in consumer behaviour to compensate for a slightly different style of use.
Yeah, it's an education process, I guess. I mean, there was a report I saw, so we're now 3 days after the Easter break, where there were 2.5 to 3 hour lineups for electric vehicle users to charge their car between Sydney and Queensland.
I wouldn't be surprised.
So things like that, I think when consumers see reports like that, I think it will make them think twice.
Yeah, that's where the government's got to be a step ahead.
Yeah.
If it wants to encourage EVs, there's no use having the EVs taken up before the infrastructure's in place.
Yeah.
And it doesn't limit transportation that way. It makes a lot of sense to have a solution to that problem long term. What would you say was the rationale for participating in the Pan Asia's January capital raise?
So Pan Asia Metals, a company that we are already intimately familiar with. So Anadara Asset Management has another fund, the Special Opportunities Fund, that's been an investor now for probably 2 years, and we've been building our position gradually over that period of time. It's now one of the biggest positions in that fund. And what we really like about Pan Asia Metals is it's in a space that we know there is going to be a shortfall in, lithium. And through putting together our research on Pan Asia Metals, I've come to learn that Thailand is one of the best places to be for a lithium producer.
If you look at Southeast Asia, if you look at Asia, over 55% of vehicle production is in Asia. So if we do India through to the Philippines and then China, Korea down to Indonesia. So it's 55% of global production. It's the highest growth region on Earth. It's got nearly half the global population, very young population. And then when you go to 2 and 3 wheelers, which is a really exciting market and completely not understood, Asia is 95% of global production, greater, to closer to 98, which is massive. So you've got those two key demand drivers in the region, and the countries in Asia are not going to import finished products from elsewhere. They're the manufacturers, so all of that manufacturing will happen there.
I suppose knowing that it's going to affect the livelihoods of future kids and the overall global economy, how important do you see the transition to green energy for transport?
I think it's really important. I think that even though governments all over the world are pushing their green energy agendas upon us, whether or not individuals agree with it, it is happening. And I think that we're still some time away from all of the technology catching up with our ambitions. Net zero targets by 2030, I think, are ambitious, just due to the fact that we don't currently have the infrastructure, we don't have the mining reserves to be able to meet those deadlines. We were conducting some research earlier this week about lithium, for example, and for every single project that's currently known on the planet, it's only going to meet 55% of our projected demand for lithium in 2030. So we either need to rapidly advance some of these projects to production, or we need to find a hell of a lot more lithium to be able to meet those targets.
That's the ideal scenario, isn't it? Finding the extra lithium. I'm sure Pan Asia and other companies alike can help out with that. To what extent would you say the investments by the fund are capped?
Our IM has proposed caps on individual positions, and we won't go and take the maximum position that we can at our first buy. So we want to be able to provide ongoing support to the companies that we invest in, and that means being able to add additional capital as they achieve their milestones.